This conference will now be recorded.
Good afternoon, everybody. This is Greg Morton. It is Sunday, February 26, 2023, and this is the weekend update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. And of course, this is for Canslim investors, so it's directed toward that. As always, this is for educational purposes only, not recommending stocks or securities to buy or sell. All investing, especially right now, has substantial risk of big losses. So we want to learn first and only then invest. And of course, Canslim's a registered trademark of Investors Business Daily. So this weekend will be pretty quick. We'll look at the M factor and sort of current market review. Those go together. Action plan currently, and we'll jump into Market Smith and look at a few charts that are setting up. And then our next regular monthly meeting will be Thursday, March 16th, 2023. I needed to move it back a day from Wednesday due to one of my daughter's birthdays is on Wednesday, March 15th, and that would get me in big trouble to not be available that night. So the M factor. As always, O'Neill teaches us, and this is really important right now, we want to diagnose, don't want to interpret, don't want to predict, and we want to look at three things. And O'Neill also says being right on the M is 50% of the whole investment battle. So we look at the action of leading stocks. Right now, this has not been good. I'm not going to go through the list, but I keep a list of all the Canslim breakouts or gap ups since the follow through day, and just very few of those are making progress. The majority of them would have stopped out. And then, there's a few. ALGM has been a star, but there just aren't many. A lot of them are just can't get traction, just going sideways. Actions of stocks owned last week knocked the group teaching portfolio out of everything except the short in Fryer Battery. And then we'll look at market polls, distribution day count, price and volume on the indexes. So going back just for the last three weekend or the prior two weekend updates that I did. So approximately 3 weeks ago, I was sort of like maybe, but proceed with caution. This was a slide. And then 2 weekends ago, it was sort of yes, but proceed with caution. It was really looking like we were going to be in a nice bull market uptrend, and we still could be. This could just be a little consolidation. And this weekend, I'm like, silly boy, it's just not doing it right now. So let's look at the hop out of here and hop over to Market Smith and look at the index charts and the coloring book and sort of see what I'm referring to. So here's the NASDAQ daily. And the big problem is just in really 4 day or really 5 trading days, it all started that Thursday afternoon when Bullard came out and started talking about a potential half point increase. Markets really didn't take that well. And since then, we've had hot inflation data. So now we've come down, just sliced right through the 21 day, can't get back through it, sliced through the 10 day, and now down at the 200 day already on the NASDAQ. So that's just some really bad, fast action with some distribution days in there. The S&P 500, spacebar, Greg, sort of looks the same. Again, these moving average lines are turned down. 10 looks like it's going to cross the 21 day. And here we're also under the 50 day already. And just a heartbeat after this construction action of trending above the 21 day. NYSE, same thing, well below the 50. So we've got to get back and re-engage battle at these moving average lines. Dow, worse. Russell, a little bit better, so hasn't broken the 50 yet. So small caps have been holding up, a little bit better. S&P 600, same thing. It's just broken the 10 and the 21 day moving average lines. But again, this just may be a normal little consolidation. We may just round this out and go back up on these indexes, go back to the NASDAQ. But you can see we're still 30% off the peak, right where we are, about exactly. So this was just not constructive, this rollover. But again, not predicting. The current picture is not very good. And then the coloring book shows me kind of how bad it was. So just in the 4 days this week, everything plunged to red on Tuesday on the MMTS trend line, and that's a pure mathematical system just based on the 10 and the 21-day moving average lines, whether they're up or down, and how far the index is, whether it's over 1% over the 21-day or under 1% over. So these, four of them didn't even go through yellow; they just went right to red. And the NYSE and the Dow were showing that weakness a little bit earlier. IBD flipped to yellow, and then on Thursday, the window of opportunity closed. So that's another big signal for me that there's really some weakness out there. And we have new lows exceeding new highs on the NASDAQ for, basically 2 days there. And then Matt Crusoe flips it red on the third day in a row. So it's red, and the NYSE sort of flipping back and forth. I do, only constructive thing, I have 11 buying days and 8 selling days in our 25-day window, but you can see we're getting ready to drop off green days. So if we rack up more selling days, then pretty quickly, there should have been an S there, sorry, I'll fix that. It was a selling day, although it was an official distribution. And distribution day count, we have 3 on the NASDAQ, 4 on the S&P 500, Dow 5 on the Dow. So not real elevated, just kind of borderline. Market school exposure was 6 on Thursday. Justin hadn't done his write up yet, so I don't know if it went down more. Power trends still own, but we'll watch to see if it can turn off, and just see how some of these recent breakouts do, if they do anything or not. So all the Canslim breakouts are in italics, bold, and underlined. If you want to go back and study those all the way back through the follow through day up to February 6th. Again, I put those in a list in Market Smith, and I think the first 5 that happened have all stopped out already. If you'd taken those, I'm not, but take those. But I was just saying, if you had, that's some of the weakness that I've been seeing. So those would stop out before reaching the profit goal, is what I mean by that. So this just a lot of weakness to me, is current interpretation as of 4 p.m. last Friday. Again, I'm open, I'm subject to change. I mean, this market, when Bill talks about the M being 50% of the battle, I think about if you have this really, really nice sailboat and you go out to the lake and it's just hot and humid and there's not a breeze at all. It doesn't do you any good. You've got to have that breeze. So right now we're missing the breeze from the M. We don't have a good tailwind. And that's sort of the problem. And then you got to have the setups too. That's like your boat. If you put your sails up and they're tattered and ripped and look like a lot of charts do all of a sudden with a lot of weakness, you're not going anywhere in a productive manner either. So we're just sort of feel like we're struggling, although there are still stocks setting up. We still do our weekend routine. Just put a couple in here. So let's just look at the weekly since we do most of our work there. So Arista Networks, nice little cup, 24% deep, good Canslim numbers, Fidelity Contra funds in there, increasing its position. So this one's set up. I don't know why they don't call that a handle. Because it went into the buy zone before it formed the handle. So they call it a cup. I call it a cup with a handle, or high handle is the term somehow, with volume coming in on the right side. So that's nice. Lantheus, go to the daily. So this one gapped up on earnings. Could have even had a low horizontal trend line or a cheat area there. Great earnings and sales, triple digits. So, maybe if we have some marketness weakness, it kind of forms a handle or a little shelf area in here and gives us an opportunity. Liquid, 69 million a day, good return on equity, low debt, 35%. ON. Now this is an IPO that's sort of in the due diligence phase if you follow the life cycle trade authors, which I do. So it's setting up, of course, this has overhead supply, but they do when they come out of this due diligence. This was written up in the New America section this weekend, and you can see it's got a cup with a handle. 16% is a little bit deep on the handle, but IPOs are a little more volatile also. Great earnings and sales on that one. And I have a pair of their shoes, and they are extremely comfortable. Palo Alto Networks. This one came back on my radar, nice earnings. Could draw a horizontal trend line across there. or even, somewhere up here is one, just the M factor's the problem. And industry group, yeah, 179. So doesn't have a lot of support, but I think Fortinet was showing some strength too. Axon, been keeping an eye on this one that had that really nasty day, shook us out. Still don't know what caused this high volume day. It wasn't a downgrade. I don't know if it was algos. I just couldn't find anything that drove that bad day. So maybe it sets up a new base, but it does have earnings this week. So keeping an eye on that. Planet Fitness, weekly chart. So industry group 12 has mutual fund sponsorship, liquid 78 million. So it's kind of, you can see it setting up. I would almost could see this as a double bottom coming across there, or sloping trend line. Yeah, so how deep is that? 44. That's pretty deep. So it'd be nice if it set up a new base or consolidation, maybe a flat base or something in here. So there's some out there. Let's look at last week's watch list at the top. Yeah, so Arista was in there, SMCI. This one's strong, but I don't like that. See how it's wedging up? It's going up while the volume's going down on a weekly basis. So I don't really like that. Palo Alto Networks, Wingstop, reported earnings, gapped up and just couldn't fight the market. WSC tried to get up there, pull back to the pivot, could be okay. And Axon. And then Dexcom 2, still keeping an eye on this one. So 18% deep consolidation, kind of looking constructive, has a little bit of overhead supply, not too terrible. Sales aren't quite at Canslim level, but 815 million in the last quarter. So it's getting up there. And this one has nice fund ownership. You got Fidelity was in, started, came out, came back in, and Fidelity Contra Fund. So we'll see what happens there. IPO maybe to keep an eye on is Next Tracker. This is one of the few liquid ones that's come out. Actually, that's under a 12% deep IPO basis, about 6 days in there. So that one may be worth watching also. So let's go back over here. So for me, again, as of 4 p.m. Friday, sort of a danger, do not enter market, unless maybe looking at something on the short side, or just need some things to improve. So still do your weekend work. Seems like a time for patience until we get some improvement in the M factor. And we do have some good setups. I just showed you a couple, so that's good. Okay, I did that already. So reminders, EPS season's still going, so be aware of that if you own anything. Interestingly, Fryer Battery that we've been studying as a short candidate, or it is a short candidate, or it's in the group teaching portfolio as a short with puts, reports tomorrow before market open. So it'll probably have a great earnings report and just do really well and crush us on that one. Traderline IPO class. So this is going on. You can still sign up. It's about 3 weeks in, but you get the recordings. Very good. Introductory one was a review of the book and reemphasized things. Second session, same thing, some of the sell rules, and then Kathy did the one this week, which was very good on how she trades. She really likes that institutional due diligence phase. And then Eve is doing the next one, which will be the IPO advanced phase. So I'm really looking forward to hearing from her. And then there's a couple after that. So you can go to Traderline, read about that. You can still sign up and get the work that's been done. And then our next monthly meeting, as I said, Thursday, March 16th, register at the Stockyard Meetup site. Tuition's $12, so you can attend live if you want to, but everybody gets recording, slide decks, links to webinars, things that come up during the meeting. And if you're a first timer and are coming, go ahead and sign up now because I send you the last meeting, so you have plenty of time to watch it. So here's what we covered in February. We'll go back to some of these in March. Of course, we'll always do the M factor, anything new in Marcus Smith or anything new I've learned from some of the Canslim gurus out there. We'll still look at Fry since they report earnings. We'll go back and see if we've had any viable gap up since the last meeting. Look at the group teaching portfolio, look at IPOs, and I'll put in a educational topic to it, maybe following on Bible gap ups, but I'll get something to plug in there. So prior webinars are available. If you don't have your written cell rules, those are really valuable. Spent 3 meetings teaching that, as well as how to do, or one way to do a weekend routine, how I do it using the Growth 250 and the newspaper. So that's it. Contact information's on this slide, so you can pause it if you need to see it. If you want to order prior webinars, just send me an email, greenvilleibdmu@aol.com, and I'll send you the list and ordering instructions. So that's it. Hope y'all had a great weekend routine. This week's kind of going to be key. I feel like we're on the brink of a teeter-totter or seesaw, whipsaw, volatile, headline-driven market. So we'll see what this week brings, and maybe we'll see some strength coming back in. So that's it. I'm out of here. Y'all have a good one.